Welcome back to the channel. My name is Brad, and today we're going to talk about a couple of different things, but we're first going to talk about the bucket system and my bucket system, what the other people are using for bucket systems, and my thoughts on their buckets and my buckets and maybe your buckets. I don't know. But first of all, as always, nothing is investment advice. Nothing. Just do your own taxes, do your own investing advices, and always seek a licensed professional because you never know. Who knows? You should always do somebody with taxes. I don't know. Anyway, comments are turned off. I'll get to the comments at the end of the video because it just distracts me as I go through and gets me off balance. We're just going ahead and go right through the bucket system. So I have my bucket system, and I really have three buckets. And I saw one the other day that they were using two buckets, but if I'm going to talk about others and financial advisors and what they're trying to suggest, what I saw on YouTube was, hey, you have bucket one. This is your short-term needs, 5 years in cash. And I'm sitting there going, typical. This is a typical financial advisor's bucket system. You put 5 years in cash. And actually, they said 5 to 10 years. And I'm like, okay, that's a little too conservative for Brad, but all right, I get where you're going. And then they say you have bucket two, and this is your growth, and it grows. And every time the market hits new all-time highs, you refill the other bucket and you just continue to go on. And I'm sitting there going, yeah, that's a strategy. I mean, you can literally put 5 years in cash if you choose to do so. I don't think that with how the markets are doing and how the dollar is deflating over time and how you're not keeping up, oh, having 5 years in cash, that's a method. So Brad's method, and I'm going to talk about my method now. And this is just my method, not for you, maybe for me. I hold right around 11 months. So really the number is I hold enough cash to be able to write a cash secured put for SPY. At least I used to. Now I've had to split my accounts. Now I have enough in both accounts to write cash secured puts on MAGs. Short term, looking to get like 1 extra% a year, not like next week, 1 year from now. I mean, come on, I'm really conservative, trying to just get a little bit more, but I have right around 11 months of cash just in case the market goes down. Then I have my income bucket. This fills up, it moves over to my cash position because it pays me every single month. And then I have my growth bucket. So I do have three buckets like everybody else is talking about. I just don't sit there and say, well, you should have 5 years sitting there doing basically nothing, collecting 3%, maybe not even probably keeping up to real inflation or the devaluing of your dollar. So your purchasing power keeps on going down, and you should have sold more cash. It's craziness. But I have enough to ride out a big market downturn. And I don't call it dry powder because I don't want to use it for dry powder. If I have to, I can turn on drip back onto my income bucket for 11 months to buy the dip the whole entire time. But I don't. And I do take only 8% of my big bucket, which is right around right now. My income bucket is about 14%, thereabouts. And I keep on looking at it going, well, I could add a little bit more safety and get 13%. And I might do that, but it doesn't really matter. I'm only living on 8% of cost. Everything else is in growth or in cash for that safety net. So I do believe that you should still have a growth bucket. I think the biggest one I saw a video the other day, and they were talking about living on 8%. And what he didn't point out was having a growth bucket on top. He just assumed that you were taking 8% of your whole entire portfolio. And I keep on saying, once you get above 130% of your income needs, maybe 200% of your income needs, then everything should be in long term growth just to outpace the market. At least that's my personal opinion. But maybe you have something else. Maybe you want to do something else. That's up to you. Totally up to you. That's fine. Now, I am going to add this to the stage. I looked at BTGD, which is Bitcoin and gold. It's a stacked fund. And I looked at ISBG, which is the income version of this. And I was talking to David the other day, and he goes, "Well, I don't think people have realized that the income version gets rebalanced twice a day, and it is clearly beating the market." I'm like, okay, I can see that. BTGD follows pretty much 50% or 100% exposure to Bitcoin, 100% exposure to gold. And you can see how that plays out, but you can clearly sit there and go, that's interesting that this fund has been beaten down because Bitcoin went down. Uh, at the same time, gold went down also. So I sit back and go, long term, Bitcoin will go higher 5, 10, 15 years. Who knows? I'm not going to guess. Gold is always predicted to go higher long term. And that's what gets into this other mentality. I'm not here to go, oh, what's going to go higher tomorrow? That's there's tons of channels out there that do day trading. Just not my style for day trading. At least that's my opinion. Then I saw a post on X, and I didn't bring this up, but it was a really good post on X. Beast something, and he was talking about holding more than one fund, not just T Spy, not just Spy Eye. And I sat back there and I went, I've always said that I like the three different methodologies. And if you look at a short-term chart, you can go, oh wow, Spy Eye's beating, but then you got T Spies right there, and they're all beating Spy short term. I'm like, yeah, but it's short term, and you go scanning out a little bit more, and total returns Spy is still losing, but does it always hold up that way? You can see times that T Spy is winning. You see times that T Spy is not winning. You scroll out to 1 year, so we have 1 year's worth of chart. You got T Spy took a hit back in April, and you sit back there going, I hold all three methodologies, which is zero DTEs, longer dated calls written every single week, but monthly on a small percentage of the portfolio to get the actual distribution rate. I own all three. I think there's no way that one person can guess which one is the best. Now, there is some new funds out there that are trying to use skew of option chain and saying zero DTEs are better doing this. Longer dated calls are better at this. Shorter dated calls better when the skew of the option chain changes, and they know when it changes. And it's the same guys that are doing the other funds, such as ISBG. They're looking at that and they're looking to figure out which one do they actually buy. Do they buy zero DTEs? They buy 2 days out. Who knows? They're looking at the skews, and that's actually somebody's actively managing and not just buying, oh, I got to make a distribution next week, so I got to sell a weekly option. Selling weekly options aren't always the best. I mean, if I look at something like uh, K Silver, he's writing options 2 weeks out because the premiums 2 weeks out beats the premiums at 1 week out. So that's why he pays on a monthly, because he's getting the best premium for us and managing that for us. Now, I could go do that myself and look at the math, but sometimes it's just easier to have somebody doing that for us. And that way you don't have to worry about it. All I have to do is make sure that my buckets and managing my three buckets, and that's all I end up having to do. I think even in my circle community, I even said that, hey, look, I'm hoping not to have to buy any new funds for the rest of the year. Maybe I buy one or two, but I'm trying to get away from buying any new funds. I think we've seen the latest market and how the market is doing for these funds. We have great options out there. All of them are great options. You just have to pick out what is best for your option, and you got to pick out your own bucket strategy. Again, you could hold 5 years cash. You could. Okay. All right. Stop joking about the cash thing, right? I mean, that's 5 years. Come on. Okay. Then I look at the Qs and I went and said, all right, Qs are the same way. Hey, on a short-term chart, and this is because TDAC is a newer fund. You can go to 6 months. You can see TDAC is right in there. You can see that it keeps up. You can see that it beats sometimes. You see that it falls behind sometimes. So you sit back and go, do you hold one strategy or do you hold them all? And my personal opinion is I hold the three strategies again. I think they're three great strategies that try to beat SPY or the Qs at different times, the behind times. But if I scroll out, and this is always, if you go far out, will always lag. Although you got to sit there and go, lag by how much? Hmm. That's not too much of a lag. But again, it's all about how you feel about it and mine. And I just take the income, goes to my income bucket. I make sure that I reinvest that back in so we don't fall behind inflation. And I always have that cash because let's say the market does do a 80% correction. Not saying that it will, but if it ever does, I have that 11 months. I could just turn my income bucket on to a drip and just let it drip. And my growth bucket, I'm hoping never, ever to have to touch it. That might just be inheritance. But I mean, I'm going to have to touch it because I'm going to end up having RMDs on the darn thing sooner or later. So that's why I'm spending it down now because I'm not old enough to retire. I did get to retire early, which is what a lot of people that are watching me are talking about. So make a plan, figure out what bucket system that you're going to use. And just as a notable comment, stock analysis, and this is the screen, stock analysis. I've been using these now, my graphs, because it's just easier. The interface is just easier for me. I like it. They send me an email every morning about the stock market real quick. They are holding a 20% discount, second time ever for a 20% discount. And you don't even need my promo code. The link's down below and the link to the free news article that you get every morning. And it's free. I'm not free. I don't get even paid for that. That's man. Why am I even talking about a free newsletter? I don't know. That's just how it is. Hopefully, this answers something about the bucket system, something about the calls and which calls are out there. There's a lot of great funds out there, and I really, when I first started this, I said I don't want single stocks. I got into single stocks, got out of single stocks. I'm looking more at the sectors. Going, do I play the sectors? Because picking single stocks, well, that's probably not the. It didn't help me on my Sharpe ratios, and that's something I should bring up. I'm going to go ahead and share that screen again. One thing that I notice is Sharpe ratios. Hey, the Sharpe ratios are right there on stock analysis. That's one of the indicators. So I try to build a Sharpe ratio greater than 1. So that's what I've done. And Sartano needs to be greater than like 1.5. So you can see how different funds affect your Sharpe ratios, right? Which is risk adjusted returns. So make sure that you got at least a Sharpe ratio getting above 1. At least try. And with all the tools now on AI, you can quickly figure out what your Sharpe ratio is of your portfolio and literally ask AI going, what sectors or indexes or types of funds? Don't ask it what fund because that never works. What types of funds? And you can figure out which type of funds you may want to get into. May not. It did recommend a type of fund for me, and I said no because it was on futures contracts, and I went, I do not do future contracts. Just don't do it. That's just me. That is my personal opinion, and you can go do future contracts if you want. That's one thing. That is one thing that I am going to hold true to is I just don't like future contracts. So none. So let's get to the comments for today, and if there's a chart, I'll just go ahead. If there's a chart or a ticker symbol, I'll try to bring it up. And if you don't want to hang around, I greatly appreciate you watching this morning. That was what I had to cover. but I am going to answer the comments that I see, and we'll just go through that real quick. But I always appreciate people joining on and at least catching the very first part of it. And maybe they want to see me answer some of these questions. I don't know. We'll see. We'll see how this goes. Good morning. And I didn't Saudi Arabia market. Maybe they asked this. I can't tell you the Saudi Arabia market unless there is a ticker symbol, which I can bring up, and then I can tell you what I think. Asking me about a market that I am not living in. I can't even tell you the U.S. market, and I live here. So I throw it out. I mean, I can look at the charts and I can read analysis, and you can go read analysis from every place else. But sorry, I just can't do it always. That's just my personal opinion. Good morning, and that's me. Oh, yeah, I even commented back before we started. Kind of suspend your broadcast hockey game. So, yeah, okay. Sorry. I wish you can always follow or come back and watch it later. I should be watching a hockey game myself, but that's okay. See, that's a good comment. All right. All right. I think this should be brought up. ETF. CL. I'll have to look this up. So, okay. Don't have the tool sitting in front of me, but I will find this tool maybe before I get done. So CLM and CRF, they're trading at a premium. And this got into Fesco. So somebody said something about Fesco to me the other day. Oh, you did this and you did that. No, I bought Fesco when it was at a discount. Right now, Friday, Fesco was trading at a 17% discount to NAV. CLM typically trades at a premium to NAV and drips. But does it have to? We're seeing it with Fesco. Fesco is no longer at NAV. So are you willing to lose 20% if it goes down? I don't know. That's your decision and how you play it out. I don't hold closed-end funds because you're seeing it with Fesco. You can see it with CLM. And unless you have a Bloomberg terminal, and I keep on bringing this up, you do not know what's going on inside the fund like professional fund managers. So go ahead and risk your retirement on it. Because again, if it goes down to from 20% a premium to no premium, you just lost 20% of your money. This is something that I'm not going to do. In Fesco, I told people for a long time, I had it way back. It is just now back down to what my cost basis is. It dropped 17%, but it always in the past traded at a discount. So why were people buying it when it was at a premium to NAV? I don't know. You tell me. I psychology of money. So that's my personal opinion on CLM. I think that if you hold a couple percentage points in there, yeah, maybe it's not going to ruin your retirement. But having a large portion in there and you lose the discount, the premium to NAV might not be what you want to play for retirement. So just keep that in mind. And it does drip at NAV if your broker does that. And Fidelity, I know, and Schwab and some of the other big brokers do drip at NAV. That's just my personal opinion. But then you also have rights offerings. And that gets into another whole subject that I just don't want to talk about, but because I did a video someplace. You can figure it out. So it's good stuff. Yeah. So hold a couple percentages. Good morning. How you doing? Always nice to see my friend. Told my friend about your channel the other day. He's raving about it. Oh, yesterday. Yeah. Good morning, working investor. Love the channel. I just started investing in cover call funds, which are great. Your channel helps me on my journey every day. I appreciate it. Oh, so I personally I still believe in AI. I still believe in tech. Crypto is taking a big hit. I did not sell my Bitcoin or BTCI, and I bought the stacked funds, so I increased my gold and my Bitcoin. Well, kept my Bitcoin the same, but I increased my gold exposure. That's why I like those stacked funds. Staples, yeah. Actually, that is a good comment. They are all doing very well. Let me see if I don't have a spreadsheet on this because I tend to have spreadsheets on a lot of different things. And hold on, bear with me. Oh, it's not there. I do have. All right, I do have this. Good stuff. Good stuff. While it's loading. So, yes, his comment is on the different sectors. And I have a sector spreadsheet. And we're talking about communication staples. Yes. Staples in the last 90 days is up 14%. But over the past year, it's only been up 6.6. So all those gains from the last year has happened in the last 90 days. Just keep that in mind. And you can see which sectors. So if you want to look at sectors, look at basic materials. Basic materials in the last 90 days is up. Just thought I'd throw that out, right? Same thing. If you look at a lot of these, REITs are up. You can look at the last 30 days. You can see utilities is up. You can see industrials are up 7% in the last 30 days. And by the way, you can do this all in Google Sheets, right? You can do this in Google Sheets. Uh, I do bring everything in through code because you can go code it, but same time, you can use this great tool called Gemini AI, and it actually will write the code for you, so you don't have to be a coder. But yes, sectors, and maybe I should show this sectors. I mean, and we're just going to go ahead. We're going to scroll down here. Haven't been looking at this, but if you look at the Mag 7, only one of them is above the 20-day. And somebody said something about this the other day to try to lock this and the format. I have to figure that out. Sorry, I need a few freeze. 2 rows. There you go. That way you can see that. So if I look at this going to Mag 7, 20 days, you can see that it's all down. You can literally see anything above is NVIDIA. So that's not good for anybody, right? But if you go back to this one, you can see financial services are below the 200-day. Might not want to be holding financials. You can see that technology is below the 100-day. I hold a lot of technology, right? But you can see where this is at. Please go look at these charts. You can put different things in. You can see gold is up there. You can see silver's up there. You can see all the miners is up there. all, all of them. Anything that's below the 20 days SMA is silver. Everything else is above. Copper. So I did buy the new K Coupe from Curve. It's actually up for me, but you can see that the miners are the ones driving most of that. So price change when you see these and it is 50% miners. That's where they're getting some of that. You can see Bitcoin and Ethereum are all below. So maybe keep that in mind. Long-term bonds. That's been one that I just don't invest in long-term bonds. But then, hey, I do the rest of them too. So I look at a bunch of different hedge type funds that's out there. And you can program and do this. And, so yes, consumer staples. See any other consumer staples funds? So I do not know of any other fund on consumer staples. I just don't know. So only ones I know of are from State Street. So hopefully that gets you what you look for. Let's bring up the next question. We're going to go ahead and go back to full screen so I can look at myself. Scott H. I know Scott H. He's part of the community in Circle. Are you familiar with XPay? Yes. Uh, don't like XPay. I think it pays 20%. No, it pays 20%. XPay pays 20%. So if the market doesn't go up 20% a year, guess what? You fall behind. Now, they just came out with a new one, TPay, actually, and it's 10%. And I go, hey, that is pretty okay, and it gets back into the psychology of money. I always look something for a positive nav, and let's bring that up, right? We can shoot. There's no reason not to bring this up. I think XPay has a purpose, right? Because XPay is going to follow the market. But if I do percentage of price change, XPay has the worst percentage of price change. That's where I come from, right? That's my psychology of why I particularly don't like XPay. Now, it is very tax efficient from what I understand. But like I said, there's a new one from Roundhill TPay that is only 10%. So if the market is going to go up 10% every year and it's just going ahead and paying you, then that might be something you might want to look at. But that's just me. I think anytime I saw this out, uh, I think it was actually Upper Patriot. Actually, I think his real name is Todd out on X. Just not to point you out, but I think he's Upper Patriot said this. Anytime you play with 17% or more on a payer or an 18% more of a payer, you're playing with the devil. No, I didn't say it. I think it was Upper Patriot that said that, right? So don't play with the devil, at least know what devil you're playing with. I just think TPay being a 10% payer might actually be okay. I think that one might actually be okay. Emerging market income funds. Mm, Going to put my holding pattern on it because there is Neos has the one, but it's on international, but it's not on emerging markets. I If I was going to be a guessing man, somebody's going to come out with one sooner or later. I know that there's an emerging market bond fund or corporate bonds, but not income funds, not one that sells cover calls. That is good because maybe a fund manager is watching this and might be able to say something about it. Oh yeah. Yeah. At least you know that I haven't changed my opinion about closed end funds. Right? Pretty much have said that from day one. I only owned the one, Fesco. Only owned the one, and it's close to a business development company. We got this conversation in my circle group. It's close like a business development company, but it's not a business to come one, and it runs as a closed end fund and doesn't run like a. So yes, I do not like closed end funds, and I don't like future contracts or ETFs based on future contracts. Just this, not me. You can, people can do it. I think it's just fine. Right? I know you're against the round funds, huh? Not all of them, right? But single stocks. I'm just going to go no. No. There's this. Why do I just bring it up? Why do I have to say no? Maybe the answer is yes. Let's bring it up. This, this we have what they call the internet now. That's what I keep on trying to tell people. All right, we have the internet, and so let's see here. I'll share it. Okay. So you're using a leveraged fund in GLDW against a non-leveraged fund of K gold versus gold. And I just go ahead and say there's no reason to be losing money with the swaps on weeklies because yeah, it's just not no, just not for me. Just not for me. Chart shows it. Chart shows it that they're not doing as well as non-leveraged funds. So why? I don't know. It's up to you. Again, always up to you, but always look at a chart and watch it over time because the chart says the answer, right? Hockey 1-1. Well, I'm going to say, yeah, no, I'm not going to say anything. I think it's going to be a good game. Going to be a good game. Yeah, and Todd's a good guy. I know who you're talking about. I know Todd. Are you buying blocks? No, I'm not. I don't own blocks now. No. I think that it's okay fun. Just not for me. I will be doing a video on Tuesday talking about the new gold and silver funds from David Nicholas, but I do not own blocks. I think that BTCI and having my exposure to crypto in other ways is better for me, but maybe blocks is good for you. Yeah, they State Street seems to be the one that came out with it. They have all and the best part is you can always marry them. So you can always buy the underlying ETF and the income version and make up your own little portfolio how you want to play the sectors. Right? I kind of like that. We're just going to go through these really quick. Are there any medical income funds? Don't know. Uh, You know, how about this? There's this thing called Google Gemini AI. You could literally ask Gemini AI that same question, and then you could put the ticker in and maybe help us all out, right? Because I can't use Gemini AI for everybody, right? But yeah, always make sure that you are using AI and AI tools. I've read on Reddit major drawdowns facilities taking 12 months to unfold. So I've been watching. There's a chart that belongs to somebody else, so I am not going to put it up. That they called for the Bitcoin bottom historically in the next 6 months, and then it rides out for 2 or 3 months, and it goes back up. But all I'm going to say is Bitcoin normally goes back up right around the halving, and the halving's coming up. There's always going to be the next halving, right? Just are you willing to be able to ride it down? That is always the question. Best thing to do in high yield. Yeah. So that's a good one. Yeah, I chose the sector bet of semiconductors, and not that I have insider information, but everything that I heard about semiconductors is it's just like silver. They don't have enough chips for the next 2 years. Don't have enough chips. What happens to the price? Supply, demand, basic economics. So I'm betting on the semiconductors. I'm betting on copper. I'm betting on that they won't have enough supply 5 years from now. What's going to happen to the price? Betting on silver. Don't have enough supply for the last 5 years, and we're now seeing the squeeze of, oh, well, I mean, don't get me wrong. I do believe, and have to go find an article for you on this, but I think Amazon bought a silver mine. Okay. People that deliver packages to your door bought a silver mine? Hmm. Maybe they're trying to say, we're not going to be short on our AWS and our servers. We're just going to go ahead and buy our own silver mine. I do believe I saw that article. I'll have to find that. I'll post that in the circle community for you as soon as I find it. So keep that in mind. Yeah, Chippy's also high. Yeah, Chippy. I own the Soxy fund, right? FBDC. Thoughts on BDC? So I own some BDCs. BDCs are getting destroyed right now with the credit market. I think that I am going to, and I've said this in my personal journey, is I am taking all the income from these, truly enjoying them, and I own PBDCs, my biggest holding, and just taking the income, and I will reinvest when the rates hit bottom. Until we hit the rates hit bottom, I'm just going to just continue to take my income. It's a great diversification play, right? A little bit of credit, a little bit of credit, a little bit of crypto. You got your equities, hedge equities, you got your preferred stocks, right? All this is a diversified play on income and not just buying all equity stocks or all crypto. Right? I mean, I show videos like that, and it's like, I really hope people don't take these things seriously. I think I did a retired on Neo's video where it was QQQI and BTCI and showed you got two funds. You put $1 million in, you get a $290,000 a year. I'm really hoping people don't take that seriously. But probably somebody does. I don't know. Okay. BDCs, any kind Blue Owl Capital Limited. Okay. So Blue Owl Capital that I own didn't do it. Blue Owl Capital that are in other, there's more than one Blue Owl Capital. Make sure that you understand which Blue Owl Capital did this. Just keep that in mind. It brought down the whole sector. When they did this, it brought down the whole sector, but it is not just Blue Owl Capital, which Blue Owl Capital, because there's Blue Owl Capitals that you cannot invest in. Just start with that out. There's some for retail investors and there's some for institutional investors. And ones that got limited were not retail investors, I do believe. Just start throw it out. Appreciate patience. Yeah. So I will be recording hopefully today with Spencer again. He did not give me the subject matters again. So I'm gonna have to make them up as I go. All right. Yeah. Yeah, and that healthcare is again State Street. AI data centers are driving prices all over the United States. Yes, so utilities is going to go up. You're going to get hit, and hopefully your investments outpace. I hope you're having talk about K-Bit. So I don't think that's his next fund. I saw they filed for it. I saw that he filed for a uranium one the other day. So I don't know if that's going to be his next fund that he's coming out with. I can already tell you the platinum fund. Everybody's bring out the platinum fund. I can tell you this: I personally will not be investing in it because he was going to get exposure through what was it? Future contracts. And I just said no. I don't invest in future contracts, even if it's from Howard. I do not invest in future contracts. So I know that how he's going to get the exposure on this one. It's going to be just like he does for everything else, and it'll be interesting. And well, yeah, I mean, haven't been watching that. Everybody's been saying silver. Yeah, I mean, I even did a video. I think that video is now 9 months. 9 months. Silver was $30 an ounce when I did my first one. I think iDevo. Yeah, so I was talking about this. I think iDevo. If I go out there, yeah, no reason to guess about this, right? We can just put iDevo up on the screen. 1 year, iDevo has done well. Right? We can put that against, I don't know, SPY. Right? It's a little bit behind SPY, but if you take it on the shorter chart, it's beating SPY. So hey, I can understand holding more than one way of the market. I, diversification, sir. Diversification. Keep on saying that. Master limited partnerships also. Don't forget master limited partnerships. I don't care if you hold Neos or somebody else's. Just master limited partnerships. Energy sector has always done well in splitting away from the market. So the market goes down, you see the energy sector goes up. So it's just a different way of collecting that income on the income side. Now, do I hold massive limited partnerships on my growth side? No. Growth is growth, right? Growth is growth. Income is income. And the other bucket is for emergencies and, oh, I'm going to take an emergency trip someplace, or I need some. You don't know what your emergencies are going to come up in retirement, and you don't have any other income. So keep that in mind. So you always have to have a little bit larger emergency bucket than when you were working, because you keep on getting a paycheck. At least I got paycheck monthly. So that's the best. I think that's another one. Oh, we talk about weeklies compared to monthly payers. So my last corporate job, I got paid on a monthly basis for years. So there you have it. They consider me a high income, whatever. I don't know. There was some bracket that I fell in, so they only paid me monthly. So it's just one of those things. And we're just going to finish this up real quick because we have hockey to go watch. Also, we'll be able to do some videos on Eastern. So they are on my radar to talk about. Yes. Yeah. So there you go. Yeah. According to Gemini, right? According to Gemini, Amazon signed an agreement with Rio Copper. Going to make sure, is it copper or silver? Either way, copper or silver, you got other people buying stuff up. Yeah, there you go. Utilities is up. Yeah, and oh, I should throw this out. There's If you look at Neos and how Neos is doing it, uh, you can get paid weekly, but there's just a certain portion of their funds that I don't hold. So there's 1 week that I don't get paid, but they've split it out that the hedged pays the last week, their SPY and QQQI pays 1 week, the boosted funds pay a different week. And if you watched Curve, uh, all the Curve, gold pays 1 week, silver pays 1 week, copper pays another week. And I can already tell you, uranium will pay the following week. So if you own all the different commodities that Curve has, they're going to pay every single week. It's going to be a different week for each one of them. Just throw it out that I know that that's how they're going to structure that. So hopefully everybody enjoyed this show. I greatly appreciate everybody coming around. I see probably closer to the max amount of people watching. So until next time, and I will see you on Tuesday. God bless. Go watch the hockey game.